Hey everybody, this is James Carpenter with the Texas Property Aces team at Keller Williams, and I am going to be interviewing a lender who works for Legacy Mortgage. He's been there a couple of years. This is Neal Anthony. Neal, thank you so much for your time. I really appreciate you coming on board and answering some questions. This probably is the most sought after video that I'm going to do.
Okay.
A lot of people are wanting to know information about loans, what's happening in the market, what is reality versus what the media is telling people.
Yes. Lots of confusion out there.
A lot. And so I'm telling people that it's not nearly as bad as the media is making it out to be. And I know you and I have had some conversations about different programs that you have for first-time home buyers, or maybe somebody that wants to sell a house and buy a house. There's some investment stuff out there too, I'm sure. And so we're just going to talk a little bit about that, if that's okay with you.
That's great.
But before we get started, I want everybody to know who you are. Why don't you tell us a little bit about yourself, tell us a little bit about Derek's company, and just tell us about you.
Great. Well, yes, like you said, my name's Neal Anthony. I work for Legacy Mortgage Group. I've been there for a few years now, and definitely Legacy Mortgage has been around Tyler for a little over 20 years. So we have a big presence here and love serving the Tyler community. I did not grow up in Tyler, but my wife and her family have been here and lived here for several years. And so we came back to be closer to family, but we're heavily involved in the community. Love giving back to Tyler, involved at Rice Elementary in a lot of cool ways with our kids.
Nice.
And just involved around the community in several different organizations.
Great. Well, one of the things that I know about you too is, and most people that are familiar with the area are real familiar with Pine Cove, and I know you're really involved with Pine Cove.
Yes,
so tell us a little bit about that.
I worked for Pine Cove for several years as a director of theirs at some of their camps down in Central Texas, and then moved back up here a few years ago whenever I started with Legacy Mortgage.
Nice.
So we definitely, our kids still are heavily involved with Pine Cove and go to summer camp every summer and love it. So,
awesome.
Great.
And you have children, you mentioned Rice Elementary,
Yes.
and most everybody on here is going to be familiar with Rice Elementary. Tell us about your kids, how many kids you have, and are they all in elementary age?
We have 2 elementary age girls, and so they keep us busy with ballet and musical theater and basketball and piano and everything else. So
Wow.
we're running around with them always.
We are living parallel lives. I have one in elementary and one in middle school. So
Okay.
yes, we're right
that
there.
will soon be our case. Yeah.
And that is, and that's just crazy. Wow, and it does definitely keep you busy.
Yeah.
With all that being said, let's start with. I know you've talked a little bit about Legacy. Let's talk about interest rates, because that's the primary thing of what people are seeing right now. They're saying, "Oh my gosh, interest rates are way too high. I can't buy a house." Tell us what you're seeing out there and the difference between what you're seeing and what the media is telling us.
Yes, yeah. So interest rates are fluctuating up and down as you see. But historically, they are still at an all-time low. I mean, we could be buying a house right now in 1983 at 18% interest. So the fact that that's not the case and that we're still in the upper 6s to low 7s is still a great interest rate. And what we tell people is, don't let the interest rate scare you or detract you or steer you away from buying a house. If your family needs to move and needs to get that bigger house, or don't wait. The time is now. Take the interest rate at whatever it is, because in our market, we know those rates will fall back down. We will be able to refinance you into a better rate, and you'll see the savings long term. What we also know about the market is house values will always be going up, whether that's rapidly or slowly. And so if we wait 2 years for you to wait out on an interest rate, that house value is now way more than it was worth now.
Yeah, I mean, we've definitely seen that. Earlier part of this year, we were seeing, in some areas, we were seeing a 15% increase from the year prior.
Yes.
We're not quite seeing that right now. We've definitely had some buyers pulling back, trying to figure out, I'm going to wait until interest rates come down lower. And what I'm telling people is that if you're waiting for interest rates to come down lower, Unfortunately, the price of the house is still going to go up.
That's right.
So that monthly payment might not be that much different depending on interest rates. I still believe that it is still a very, very good time to buy right
Yes.
now. Their houses are sitting on the market a little bit longer, so there's some programs out there. You and I are going to talk a little bit about some programs that we can help with buyers getting maybe even a lower interest rate, and maybe even, and we'll talk more about that. That being said, I remember, because I'm old enough to remember, and I'm probably older than you. I remember the days of my parents having that 18%, 16% in the early 80s.
I remember seeing a mortgage statement that was 12%. So, I mean, even at that, we're still at a really great compared to 12 or 14.
So for a long time, we have been spoiled. Buyers have been spoiled with these very, very low interest rates. I mean, when you see an interest rate of 3.5%, and then now you're seeing interest rates close to 7%, you're like, what happened?
That's right.
So
lot has happened over the last couple years.
And yet still, even with those interest rates, we are still seeing buyers coming in, and we're still seeing houses being sold, and we are still seeing a low inventory.
Yes.
So houses, we may not be getting $20,000 necessarily over the asking right now. However, we are still seeing competitive offers on the right house in the right neighborhood.
And there's a lot of great houses out there for people to buy that if they've been waiting, there's tons of inventory that it's worth going to look at some.
Yeah, so that's an interesting point. Even knowing that this time of year there's a pullback on inventory, and yet this time there's not nearly as much pullback on inventory as we've seen in past years, for sure. So, so it's really a good time to buy, and yet still a really good time to sell for you sellers out there as well. So, and we'll talk a little bit about some programs that maybe we can even offer to help a person who needs to sell and needs to sell in a hurry. We can talk about some programs that are out there to help those sellers as well. So, Neal, tell us a little bit about the process. So I really want to talk about the process, because especially a lot of you guys are out there, first-time home buyers, you're not real familiar with the process. As I talk to a lot of potential buyers, I usually tell them, actually most of the time I tell them, are you already pre-approved? Let's talk about that process and what that looks like for y'all.
Yeah. So getting pre-approved is probably easier than some people think. I mean, yes, as a lender, we do look at your assets, we look at your debts, we look at a lot of different numbers in there. But really, to get that process started is submitting an online application or giving me a phone call, and I can help you fill out that application. And that allows us to start looking at those numbers. But what I love about that is our desire in our heart is to help buyers get into a home. And so as we do that, we want to make that process as seamless and as easy as possible for you, the borrower. And so there's a lot of different tools we use and a lot of different ways that we can do that. We love explaining your options, helping you understand what a mortgage actually is and what that might look like. But yes, we can start that through an online application, literally, that you can fill out in about 15 minutes. And from there, I can start taking a look at things. And
that's really what we do when we're talking to our potential borrowers or potential buyers. The first thing we do is tell them about y'all, and tell them what it is that we can do, and send them the application. Because for us to go show them a house that's $500,000 and knowing that they can only be approved for $250,000, well, that's not going to be fair to the buyer.
That's right. That's right.
For sure.
That's right.
Because everything's going to pale in comparison.
You're going to get really excited about that $500,000 house.
That's right.
And you can't afford it.
Yes. And so we will send an application. We can either do that through our website. You can call me, of course, or you can call Neal, and I will either way, we're definitely going to get you in touch with a lender that's going to be able to do that. So the application is obviously the first step, getting the documents and things together. So on a normal buyer, somebody who's not self-employed, I have seen that process is actually pretty seamless. Would you agree with that?
Yeah, there's really a handful of documents that we need. And once we have that application along with those documents to just verify your income and some of your assets and things like that, I mean, literally within a matter of hours, we could have someone pre-approved if With your self-employed ones, those are a little bit longer because we dig into tax returns and
Sure.
some other things.
Yep.
But if you are working a W-2 standard job, it's really a pretty simple, fast process.
Okay. And one of the things that comes up a lot are that we do work with a lot of small business owners here in the area, and they've been in business for themselves. Tell us a couple of hoops that small business owner might want to walk through. Obviously, we want to see that self-employed borrower has been in their business, owned their business for a couple of years. Is that
Yes.
true?
Yeah, usually about 2 years is what they want to see, is that you've been in business with your business for a little over 2 years, so that we can track those on the tax returns. And then there needs to just be good, stable income. As long as your business has been growing and each year you're making a little more, that's great. One thing to be aware of as a small business owner is your CPA and accounting firms are really good at doing your tax returns. And you like that, but you want to be aware that when you're applying for a mortgage, that oftentimes we have a lot of write-offs or a lot of things that we're depreciating or assets there that we're taking off of our tax returns. That actually, because of that, you show less income than you actually made on the tax return. And that can sometimes damage when you're actually trying to get pre-qualified for a mortgage. And so just be aware of that and make sure that if you are planning to buy in the future as a self-employed borrower, that you want to make sure that your accountant's aware of that so that you can make sure you structure that correctly, and it'll really help your situation.
For 2 years?
Typically for 2 years. Sometimes it really just depends on what the underwriters are going to want to see. Sometimes they'll only want to see 1 year's worth.
Okay.
And as long as we can show that there was better income that 1 year over the previous year, then that sometimes suffices. But it's best to have 2 years worth of good, stable, increasing income as a business owner.
You actually brought up a really good point too. What I want everybody on here to know is that when you're working with Legacy, you're not just working with one bank. They are going to be able to take all of your information and put it out to a lot of different lenders so that you can get the best, you can give them the best situation for them.
The best rate and the best deal. Yeah, that's right. We want to look at not only the rate. A lot of us are thinking interest rate because that's what we hear in the media, but we also need to be looking at fees. And so fees are important as well. There are certain loan fees that are required to be paid out on any loan, and then there are others that are added in there. And so we want to take a look at both of those to make sure you're getting the best deal on the rate and the best fees. And we can shop. We have 20 that we work off on a regular basis, but we can shop up to 200 different lenders and find you the best deal. And so it's really a great thing for the borrower, because I work for the borrower to make sure that they get the best deal they can.
So working with a local lender here in the area is a real benefit to you buyers out there, because for several different reasons. We're going to talk about a few of those. One of them is that you're getting to be able to be in front of somebody right here with you. You're not just some number on a computer screen, and you're going to be able to give them a solid pre-approval. Folks, I will just tell you, if you are getting a pre-approval from the likes of Rocket Mortgage or any of those places, and I don't want to disparage anybody, I just want to tell you that sometimes they're just trying to throw as many noodles up against the wall and see which ones stick. And so you may not, that pre-approval that says that you're approved for $250,000 or $400,000 may not be that, because they don't have all the documentations to do that. You're going to do the work up front, correct?
Yes. Yeah, that is a important staple for us at Legacy. Is we want to make sure that you truly are pre-approved. If we're going to give you a piece of paper with our name on it that says you're pre-approved, it's because we've looked at everything and we've ran the numbers. What we would never want for one of our borrowers is to get in the middle of the loan process where they've had to pay out of pocket for expenses and then come back to them and say, you know what, you're actually not approved for this because we didn't take a look at this. And so we want to do all that on the front end to make sure that you truly are pre-approved and that it'll all go through.
Experience is a big part of it. Of course, Neal's been doing it for 2 years, and the company has been around for 20 years in the East Texas area. They understand the market, they understand loans, and they understand the vendors that they're using to make sure that you get the best loan possible. I know Derek personally, and he's a great guy, and he's going to work hard. If Neal doesn't know the answer to a question, Derek probably does.
We've got a resource. We've got a good resource. scores.
So tell me about the different types of loans. There's a lot of them. There's conventional, there's FHA, there's USDA, and VA. So let's just, I don't want to go into detail or too much detail on any of them, but let's just talk about those, just kind of gloss over them a little bit.
So we'll do a quick overview of those 4 loans. And so conventional obviously being kind of the best loan product that we can put you in. It has the fewest restrictions. You're able to, as a first-time home buyer, you're able to put only 3% down. So common myth in the loan world is that I've got to have 20% to be able to put down on a loan. That's not true. For a first-time home buyer on a conventional, you do have to have above a 640 credit score typically to go conventionally, and as a first-time home buyer, 3%. If you're a returning home buyer, it's 5%, which is still a great low down payment. FHA is going to be a government-backed loan. It is going to have a funding fee of 1.75%, but it allows you to have a little less of a credit score. If you have some credit history that you know, hey, I know I don't have the best score, it's a great program to be in with that FHA loan, and you can put 3.5% down on a FHA. USDA is another great loan product. Typically, same thing, going to have to be above a 640 credit score or higher, but it allows you to buy a rural property. And so as long as it's outside of, in East Texas here at least, if it's outside of the Tyler city limits, Longview city limits, and Marshall city limits, typically there's a USDA property eligibility map that we can search the address on. But
so real quick on that, I'll just tell y'all, if you are working with us, we are going to know if that house is going to be able to go USDA. Of course, there's credit stipulations you will know going out that you're already approved for a USDA loan. And I will tell you, I've sold many houses back in the day with USDA. It's a really, really good program. And you might think rural, like I need to be in like the middle of nowhere, but you can be in as little, you can be in as Flint,
Bullard's rural,
amazing,
or White House, or anything around Tyler here. There's a lot of options, and so that allows you to put 0% down on a USDA home loan. So there are some income limits as well that we have to make sure you're under, but it is a great loan product if we can qualify for it. And then obviously, lastly, your VA loans for you veterans out there. We love veterans at Legacy Mortgage. I know Derek is a veteran, and we have a heart for veterans. So we love looking at at VA loans, and those VA loans are also, you can put 1%, or sorry, not 0% down. Just like the USDA, 0% down, and they are a great program for veterans that allow for some help there on their end.
And you're not limited on a VA loan. You're not limited to a location.
No property requirements, no income requirements. It's a great loan product for a veteran, and there are some funding fees on the VA side of it for those veterans, and they're usually aware of that. Or if they have disabilities, some of those funding fees are waived if they have a VA disability. So it's a great option.
So just another added bonus, I'm actually a veteran myself, and I'm certified as a military relocation professional for all you veterans out there. So we understand that process real well, and we've worked with Legacy. Of course, I don't want to sing Derek's praises too much, but he was an officer. He went to West Point. We're not going to hold that against him for all you guys who were not in the Army.
That's right. Not an Army guy. No problem.
So we just like y'all really want to focus on the veterans. And with that being said, let's talk a little bit about, y'all have some specials that y'all have in place for I think y'all call them Heroes Perks.
Yeah, different perks.
Yeah, so let's talk a little bit about who qualifies for Hero Perks.
Yeah, so your Hero Perks are going to be veterans, anybody in the first responders, police, fire, anyone in that category is going to qualify for those Hero Perks. What we do is we actually give you $200 in credit on your closing costs from us as the lender to just say thank you for all that you've done and who you are. We also have that same perks program available for those that are teachers or those that are in healthcare. We group healthcare as part of that Hero Perks because without our doctors and nurses and everyone providing for us and allowing us to stay healthy, we know that is a big sacrifice and a big deal. And so we want to just say thanks. back to our heart at Legacy is just we want to give back, and we want to make sure we honor those where honor is due. And so as part of that, we have that Hero Perks program. We have our Medical Perks program. We also do one for ministry and nonprofits if you're involved in any kind of ministry or nonprofit. And it's just our way of saying thanks, and we'd love to help you with your home purchase.
That's awesome. Well, we really appreciate that you go reach out to those first responders, the clergy, all of those guys that really sacrifice so much for the rest of us. We really appreciate that. And one of the reasons why I love working with y'all, y'all have been amazing. So, you know, a lot of times folks will come to me and they're saying, hey, James, I'm already pre-approved. I'm pre-approved with USAA, or I'm pre-approved with Rocket Mortgage, or Chase, or anything like that. Again, when you're approved with a big bank like that or a big corporation like that, it makes it a little bit more difficult. Of course, if you contact us and you want to have that what we call a strategy session to kind of walk you through what it is that looks like versus working with a local lender, we can walk you through that. One of the things that y'all have that I don't know anybody else that does, and I haven't seen y'all do that, but you have the oh my gosh, I'm going to forget.
Best deal guarantee.
Yeah, the best deal guarantee. So let's talk just for a brief moment about that. So if you are a borrower and you already have a pre-approval and you think that you want to use them, tell us a little bit about what y'all can offer them.
Yeah. So we do our Legacy Best Deal Guarantee, and it is, we guarantee that we can find you a better rate and better fees. If we have a loan estimate or a fee worksheet from your lender with your pre-approval, if we can't beat their deal, we'll give you $300. We can give that to you in a gift card, in cold hard cash, in a check, however you want that. But our aim is, we know we have enough great lenders out there, and we have a giant partnership with some really great lenders that allow us to get you the best deal. And if we can't, we'll give you $300.
That's the best deal guarantee. And just for the record, I haven't seen them pay, but whatever. So just keep that in mind. We just have a lot of things in place. Y'all have a lot of things in place to make sure that you really are looking out for the buyer. Lastly, before we close here, tell us a little bit about what some of the tricks are that other lenders will play. They may say, oh, your Legacy Mortgage is offering you 7 1/8, whatever, but we're going to offer you 5.
Yeah.
I said lastly, we're going to talk about one more program before we get done, but what are some of the tricks that they do to get that thing down to 5%?
Yeah, oftentimes we see this on a pre-approval, where a pre-approval come in. We know rates right now are in the upper 6s to lower 7s, depending upon your scenario. But if someone comes in and says, I have a pre-approval and they're giving me 5%, that already raises a red flag to us, because rates aren't in the 5% range right now. And so what we look for is, where's the fine print in that? Yeah. And typically there is fine print somewhere that's like, hey, with 2 points, we will give you 5%, or with 4 points. I had one the other day that was 4.4 points. Wow. Which, if you know anything about points are 1 point equals 1% of your loan amount that you're paying out back to them to buy that rate down to get that rate. And in this type of market, that's a crazy ask. And
you'd have to be in a loan for a very long time to play 4 points.
Yes, yeah, sure. It is not worth it to you.
Even on a $200,000 house, 4 points is $8,000.
That's right.
And that doesn't include closing costs. That doesn't include anything else. That's just points to get that thing down. So let's say that gets you down. I don't want to get too much in the weeds on this, but let's say that buys it down, and your payment goes down by $200 a month. I mean, it's going to take a long time to break into that $8,000 on a monthly basis. Chances are the average person isn't even in a loan longer than 5 years.
That's right. As I said, they're either going to sell their house before then, or the rate is going to go down that we're going to be refinancing them before they ever realize those costs.
And exactly. Yeah.
And there are some situations where a small amount of points makes sense, but that's something that we want to look for, is what are the different red flags that might be on that if it's not what the market rate is.
Okay, yeah, that's great. So you had mentioned, and I don't know the name of this program too. We talked about this, where the interest rate, you can actually buy a lower interest rate, and then over the next 2 years, that interest rate would actually go up. What's that program called? And what's that all about?
So a lot of our lenders right now, lenders in general, they also want to see you get into a home. And so if you're a buyer out there, the lenders are going, hey, we want to do that loan. And so they're offering some really great programs. One of those that several lenders are offering now is called a buy down program. And there's what they call a 1 buy down and then a 2-in-1 buy down program. And so we'll talk a little bit about the 2-in-1 buy down. What a lot of lenders are doing right now is they're saying, hey, if the rate is 7%, for the first year, that buy down can be 2% less. So for your first year, your interest rate on your loan is going to be 5%. Wow. If it's 7 is the normal. And then the second year, they're going to move that up 1% to where you're just paying 6% in interest. Now, how that buy down program works is typically the seller is giving concessions or someone is giving some concessions to make up that difference in that. But if a seller is really motivated to sell their house, a lot of times the sellers are willing to work with you as a buyer on that. And it's a great option out there to get a little bit lower interest rate for the next 2 years. And the seller is able to sell their house and really win big on that as well. And so it is a win-win on both sides. And our hope is, and I think that's what the lenders are thinking, is, hey, 2 years to get a little bit lower rate. Probably in 2 years, we hope rates are a little bit better and we're in a better spot to be able to then look at other options.
And because there's a little bit more inventory, we are seeing sellers that are giving more concessions now than they were 6 months ago, even.
Yeah,
certainly a year ago.
There's some good flexibility.
There really is. So that's going to work out real well also. Well, again, I'm James Carpenter with the Texas Property Aces team. And of course, this is Neal Anthony with Legacy Mortgage. And if y'all have any questions, feel free to go to our website, texaspropertyaces.com, and we can get you in touch with Neal or Derek or anybody over at Legacy. We really want to help you guys in getting into the house that you want. Neal, do you have anything to say in closing?
No, just thanks for having me on the show, James. And along with that, just we truly do. This is a great time to buy, and we would love to be able to serve you and help assist in any way that we can.
Awesome. Well, Neal, thank you so much for your time. Really appreciate it. Okay,
Thanks,
have a great day. See you.
You too.
Bye, everybody.